You know, it's all-time high. Miners are starting to participate. You mentioned GDX. I think October traded up to 44. I think it takes that out. I think miners are starting to catch up, and they should be. And listen, central banks have been buying gold hand over fist now for the last 3 years. That has not abated. And what I've said and what I believe, I mean, they're hedging their own ineptitude, and they're doing a really good job. And I think gold can continue to go higher. You mentioned rates. That headwind of higher rates has become, if nothing else, is abated, maybe a bit of a tailwind. And I think in just almost every environment that we can think of right now, gold sort of works.
Even in a strong dollar environment, which is exactly what we've had, gold has been working.
Well, it's certainly held up. And, yeah, think about where we were when the dollar was clicking over 109. Gold was even hanging in there. And so, yes, totally agree with Guy. If you look, and I'm curious Carter's view on what I think is the greatest 20-year chart in markets is gold. And so the dynamics around gold, though, so on a 20-year basis, you're talking about secular trends, you're talking about thematic dynamics, you're talking about just things that have been going on over time. The fear about the dollar, the fear about the U.S. as a reserve currency, hold your breath. That doesn't happen overnight, but I think those are ingredients here. But it's nice to see gold really be gold and prove that Bitcoin is not gold, because, again, they are very different things. And on a day when we got a weaker ISM services, significantly weaker, and I realize it's just one data point, although the services numbers in January are weaker, you set this up along with what else is going on, and it's a very good backdrop for gold. But I'll get to the economy. I mean, what would be the biggest issue for the stock market? It would be a growth scare. It wouldn't be, the Fed being not quite as friendly as you want them to be. The Fed can't reverse, and the Fed's not going to be hiking anytime soon. But really a growth scare. And when you have a 40 basis point move in the 10-year in 22 days year to date, that's something that suddenly now I'd be more fearful below 375 than above 475. And we've got a big payroll number on Friday. So kind of cool to be talking about macro in the middle of earnings season, because I think this stuff's really important. And I think gold is telling you something.
Well, back to gold, and one thing that you said is important. I mean, obviously, it's a great chart. It acts well, and yet it's still so far below its peak adjusted for inflation. That's the key, right? So that while gold is an all-time high, in real terms, its peak was in 1980, right, when the Hunt brothers were cornering the silver market and gold had the biggest spike of all time. So we would have to still go up another 20% to equal its all-time high adjusted for inflation. As to rates, I mean, and look, it turns out that it's neither higher for longer, nor is it lower for longer. Rates are just this permanent, for now, 3 years of this, 4.5, a little bit higher, a little bit lower, and it might just be why the equity market has held up so well.
Right.
Geopolitical, Guy mentioned central banks, Tim mentioned the economy and inflation. It's not really an inflation hedge, though, right? Because that's what you're saying. What is an inflation hedge? Bitcoin's an inflation hedge. Bitcoin is risk on, gold is risk off. So if you want to play gold, you got to play with the leverage bet, the miners. You said it. 2 to 3 times leverage. We're not there yet. More room in the miners to run. So if you believe gold's going higher, then the miners are going to get you the leverage, and they have that operating leverage that we've seen, but we haven't seen the historic leverage that we often do.